Dr. David Anderson is a professor and Texas A&M AgriLife Extension economist in the Department of Agricultural Economics at Texas A&M. He is the livestock and meat economist. His work involves the analysis of livestock market economics and policy. He's originally from Coolidge, Arizona, where his father is a cotton farmer. And so with that, I'll turn it over to you, Dr. Anderson.
Hey, thanks, Stacy. I'm glad to be with you guys today. I got a few charts that'll kind of guide our discussion as usual. You guys fire questions at me whenever. I'll watch the chat box and the Q&A box and work through any questions we get. I'll even take hard questions. See if I can. Let's see here. Let's see if I can share the screen. Stacy, you may have to allow me to share the screen.
Try it now.
Hey, there we go.
Sorry about that.
No problem. Oops. Clear at the end. Let's try that again. There we go. Well, you guys saw the thank you up front. I always like to have that on there just to, I appreciate the opportunity to be with you all day. I want to hit kind of these bullets we have on here. I've got some charts that kind of go with each one of these. I'm going to start with prices. We have some prices rebounding, whether we're talking fed cattle or calves this week. I'm going to talk a little bit about slaughter. We've got some more breaking up of the logjam a little bit as we go along. Little on cattle on feed, because really as we talk about these rippling effects going through, cattle on feed report came out last Friday at 2:00, which should have been just as Stan was talking with you guys. I think Stacy, you had Stan on last week, and so I don't know if he was able to dig through that, but I thought there's a couple of interesting things in the report that are I think worth mentioning. I'm going to point out a couple of things going on in terms of fed cattle marketing and sales, and how we see cattle being sold, and some changes that have happened just in the last couple of weeks. And I will remind you, the CFAP program, the assistance to livestock producers sign up started earlier this week. And so I thought, I didn't bring any more slides on it, but we can certainly talk about it if you want to. And I did want to at least have a bullet there to remind me to say something about that as well with things getting started. So let's jump into some of this. I'm going to start with fed cattle prices. We averaged about 116. This was last week's weekly average. So far this week, again, in that same ballpark, looking around at prices, again, that 115 to 120 range so far this week. One of the interesting things in it is you look at, for example, yesterday's sales in negotiated cash prices. One of the interesting things that jumped out at me is something we don't see very often, or at least of this magnitude, and that is while I'm showing you fed steer prices, if we looked at heifers were carrying almost a full $3 premium over steer prices. So looking at some of yesterday's trade, about 119.50 on the heifers and 116.75 on the steers. So it's fairly common for those prices to differ just a little bit, but a full $3 practically difference between those is something you don't often see very often. Now we might ask why that is. Is it just a quirk of what happened and what attributes those animals had that made them go at that price? That's a good question, and I'm not sure I have a good answer for that. I think at times in the past, particularly when we've had very heavy steers, heifers being lighter, smaller carcasses, I think that has supported some premium on the heifer side, because you could move those to food service with some of those smaller cuts. We often talk about, cuts being too big for the box, or things like that, and heifers that they would be smaller, and there's some targeting that can go on there. So whether or not that really means anything, I found it kind of interesting in the marketplace, but still prices holding in there about where we were, at least where we were finishing up yesterday and this morning, about where we ended for a weekly average last week. Now, I should say too, that for some that sold at 120, we might think, well, gosh, that's pretty impressive. But at the same time, because of the backlog, because of our constraints in packing, we're not moving as many as we sure would like to. So that might be a good price if you were fortunate enough to be able to sell and get that. It's also interesting, you might notice on this slide that we've actually moved above a year ago prices in the last week or so. So we certainly see this rebound as this log jam continues to adjust. But prices up a little bit more than a year ago. But again, with that backlog of animals that we have just because of capacity. If we were looking at, say, 550 pound steers, number one steer calves, Southern Plains, for the most part, local auctions appeared to be a little higher this week. I saw yesterday's Oklahoma City prices were up $2 to $6. Whether we were talking these 5 to 600 pound steers or the 700 to 800 pound steers were also up in those ranges too. So certainly in some cash markets, at least for these heavier feeders, certainly moving a little closer to a year ago prices. And so we've seen some rebound there as well in the calf markets and feeder cattle markets as well, kind of following along with what we're seeing on the fed cattle side. So this week, overall some improvement. I don't know about everybody. We were fortunate to get some pretty good rainstorms here, so I hope those were widespread and got to everybody who needs it as we maybe get a couple more of these fronts here. It's getting late in the spring for that, but certainly that was pretty welcome. And I think what we normally see in our local auctions is, you get some rain, you get a little pop in prices as well. So there's other reasons besides what we see in fed cattle filtering down to feeders and calf prices for a little better prices. Heck, we've talked a lot about the cutout, the effects of this log jam in packing. If you take a look at the cutout, we're starting to see some adjustment also where we have fed cattle prices rising as we're able to process more cattle, and that wholesale boxed beef market's coming down. We averaged last week just over $4 a pound. We were down to about $3.65. That was as of this morning. So USDA AMS reports the box beef cutout value at both morning and afternoon. So I just stuck this morning's price on there. That's, the weekly average will be a little higher than that, but I think it certainly shows we're seeing some changes there. Well, I didn't bring a chart of some of the cuts underlying this. We have some cuts that are higher and some are lower, really reflecting different market conditions and interest in those various cuts. But I think it's pretty clear we have some movement that direction in the at least in the cutout as well. I want to show our charts from the cattle on feed report. Really, as we see the report came out last Friday afternoon. With slaughter declining, we've certainly got fewer fed cattle marketings, fewer animals going out of feedlots, down something like 25% versus the year before in the report. It makes for a pretty dramatic chart of fed cattle marketings, but as we know, we've not been able to process as many animals, then we don't have as many going through the marketing system, going from feedlots to packing plants. So that was pretty clear in the report and certainly expected. So as we talk a lot about adjustments, there's been lots of talk in the papers about, in our industry papers about this backlog of cattle, this backing up of animals that are in feedlots waiting to go to slaughter. I think one of the things that's not been talked about enough is that there's a backlog, but we also don't have just a static industry where nobody does anything and nobody acts. One of the things we have going on certainly is sharply lower placements. In fact, that's 2 months in a row, March and April, of placements that were at least 20% below a year ago. The report came out and had 22%, I think, was the number below a year ago in terms of placements. And so, these adjustments are happening, and they're not just adjustments at packing plants. This is rippling all the way through. And so, I think that's worth kind of looking at that we adjust. And one of the adjustments is to put fewer animals on feed because of that, because of, more animals are still there in that backlog. So we're seeing these adjustments kind of happen all over. And this is a big one. I've always, in the cattle on feed report, they break out placements in Texas, Kansas, and Nebraska by weight. And you can see under 600 pounds, 6 to 7, 7 to 8, 8 to 9. They even have some big boys in there at over 1,000 pounds in the report. I've tended to kind of keep charts that sort of split them out. Let's look at under 7 and over 700 pounds. Kind of thinking about, calf feds versus feeder cattle in those heavier weights. One of the interesting things in the report is the number of cattle placed weighing more than 700 pounds actually were below a year ago, as was the lighter ones, but we had a larger effect on the heavier placements. We had a bigger decline on heavier placements versus lighter placements, which I think makes a lot of sense if you were thinking about, how long is this backlog going to take? Do I want to place heavier animals knowing that I might need that backlog or those plants to open up quicker sooner? And so I think we see some effects of this on just bigger effects on placements in those heavier categories. So I thought that was worth pointing out also, digging a little deeper in the report. Of course, cattle on feed down 5% year over year, another month of down 5%. Again, the reactions that we see in the marketplace of, how do we adjust to what's going on and adjustments happening. I got one more of these on cattle on feed that I think is pretty instructive. If we're thinking about a backlog of cattle, how big is that backlog? How long does it go on? One of the things I've always calculated is cattle on feed over 120 days. So out of the report, you can get an estimate of how many cattle have been on feed longer and longer. And you can see there's a seasonal pattern to that. And if you think about it, if we were placing more lighter weight cattle, then we're going to have more cattle on feed for a longer period of time. As we start this backlog and can't move them to slaughter as quickly, we ought to see the numbers of cattle on feed increase of the ones that have been there longer. And this would indicate of those cattle that have been on feed over 120 days, pushing about 400,000 head more. So we start thinking about a backlog of heavier animals, of animals that are ready to go but don't have a home yet. I think this shows that while I didn't make a chart of it, I have often calculated cattle on feed over 150 days too. And if I take what's in the report and look at it, I've got more cattle on feed more than 150 days than we did a year ago. And it gives us a little indication of this backlog and what's there. And so, again, over 120 days, about 400,000 head. I think I mentioned those. We had a bigger impact or bigger reduction in placements of heavier cattle. So, that means that, on the margin, we placed a few relatively more lightweight animals. So we ought to see over time this number adjust, reflecting that as well. So I think that's one of the interesting things you can kind of dig out of the report and say, okay, how are we adjusting? What is this backlog? And how do we work ourselves out of it? So I thought that was worth showing. Since I've been talking about the backlog so much, I thought I'd show cattle slaughter. It's pretty clear to see the decline as plants slowed down and closed. Yet it's pretty clear to see this rebound too, from about 435,000 head to almost 560,000 last week. In fact, I think it was I wrote in my notes 555,000 head last week. So we don't have the actual data yet to look at. You'll see that spike down in that red line, which is our 5-year average. That decline simply reflects Memorial Day. and that was this week. And so you run fewer head on Memorial Day, obviously. In fact, the estimated slaughter on Monday was about 2,000 head. So normally you get pretty small numbers on one of those big holidays like that, particularly a Memorial Day. You can see 4th of July very clearly in the data, as well as Labor Day. And so it's pretty clear to see those big holidays that take out a day of slaughter in a week. It's pretty clear to see those in the data. But if we take a look and broke this out daily, our estimated slaughter indicates that we continue to see an increase in our ability to process cattle. So I think one of the things it shows is plants are figuring out how to run, how to change shifts, how to do things differently, as well as plants opening, getting more labor back, figuring out how to run things. And we're seeing some adjustments getting us closer to where we were a year ago. In fact, if we look at the daily slaughter this week, we're about 8,000 or 9,000 head per day higher than we were the same days last week. So Tuesday, Wednesday, and Thursday of last week, we're moving about 8,000 to 9,000 a head per day more than we were last week. Some continued increase. But if we compared that to the same days of the same week a year ago, we're running about 9,000 or 10,000 head per day below last year. So yeah, there's some improvement. There's some daily improvement in cattle numbers that we're able to process in terms of fed cattle. But we're not quite there yet compared to the numbers we had a year ago. But part of that adjustment is how we, can we move the ones that are ready, the closest to being ready, the closest over ready? Let's move them first. We make some adjustments in which ones we take. We change how many we put on feed, and I think all of that works into this total adjustment. But it's I think the thing I'd say is that's progress for really some unprecedented changes and adjustments. I think that's some progress. One of the ways I think we see progress is the number of cattle that we're processing on Saturdays. As we continue to see some increases over the last couple of months, or certainly 6-7 weeks, in terms of the number of head we're processing on Saturdays, up over 50,000 head last Saturday. Continue to see, certainly more than the 5-year average. So again, thinking about adjustments, we are adjusting. So I think that's kind of interesting to keep in mind. I wanted to show 2 charts to show something about how we're selling fed cattle and some changes. So in the mandatory price reporting data, I think everybody's heard these terms. We talk about cattle sold in a negotiated cash market, a negotiated grid market, where the base of the grid is a negotiated price, and then we make adjustments for quality or whatever characteristics on top of that, formula pricing and forward contracts. What I wanted to really highlight is, let's take a look at this. The red line are formula prices. This data is weekly, going back to January of 2016. And you can see over time a steady increase in the number of cattle sold by formula. And by the same token, some decline in the number of negotiated cash prices. Grid prices, negotiated grid prices have been roughly 5%, 4 to 5% of total sales. But look at this change just in the last 2 or 3, 4 weeks. This sharp decline in formula in the number of cattle sold, fed cattle sold by formula versus negotiated grid. That's a pretty drastic change in over a couple of weeks. I think that, really highlights the efforts of a whole lot of people in the industry to, how do we deal with, in these unprecedented times, are there some other ways to sell? Can we do some things differently? And I think it's showing up in this data. And I don't know how many people had seen this. I had the good fortune to be part of a webinar last night. We talked about some of this as well. And I thought that, hey, this would be a good idea to bring today to show that, we're not really in a static market. We actually have some real changes going on in terms of how we sell cattle, really driven by our industry, I think, in trying to say, are there some ways we can do some things differently? This is for all fed cattle as reported in the mandatory price reporting. I took the data for steers and heifers sold for Texas, Oklahoma, and New Mexico, and you can certainly see this pretty sharp decline in number of formula priced. And again, it's negotiated grid that's climbing up over 10% from, darn near like 1 or 2% normally weekly. So we see that increase there as well. I just thought that would be something maybe of interest to show that, hey, some things are changing. We continue to see adjustments. We continue to see some changes. And in this regard, some more negotiated prices, which I think most of us would argue that that's probably a good thing. I think that's my last slide other than thank you. With that, I'm gonna stop sharing this screen. I think I got that done. And I see a couple of questions in the Q&A. And so, heck, let's jump into these. So, good question right off the bat. Ernie's asked me, is there, that he's heard there's a backlog of 1 million head of market-ready cattle in feedlots. Beginning with the March 1 cattle on feed report, looks closer to 500,000 head to me. I would agree with you. Where does that I've seen that 1 million head or bigger quoted a lot in the kind of the popular press. If I compared weekly slaughter and daily cattle slaughter, fed cattle slaughter, for this period of time that we're going through all of this, let's say the last month, or the month of April, to the same month last year, the difference in slaughter is about 1 million head. So I think a lot of those things have been the people talking about that have said, well, gosh, we got 1 million cattle backed up. In fact, I saw one that said it was 1.3 million head backed up, which is the equivalent of about 50% of the number of cattle on feed in Texas, which, I always view sometimes, maybe I'm a skeptic, but I do view some numbers with a grain of salt sometime. And I thought, man, that's a big number. Let's think about this a little bit. When we see these adjustments, yeah, we've slaughtered that many fewer head, but if you look at the changes in the number of cattle on feed, we're a lot closer to 400,000 to 500,000 behind. I think the other thing people really haven't considered much is if you look at the increase in slaughter in March, year over year, we actually moved a whole bunch of cattle in March more than we did the year before. So that, we actually got rid of some of this, quote, backlog before the backlog ever occurred. I'd probably argue, too, that in March, that's when we had the big, basically, collapse in the fed cattle futures market for the nearby April contract. But cash prices didn't fall as far, which created a huge basis. And, usually, what that big basis is telling you as a market participant is, man, I need to move some cattle and grab that basis. And I think that's exactly what people did. The futures market, the basis gave everybody a market signal to move animals. And so we actually moved a bunch of them that would have been part of this backlog. And so, I think that backlog looks a lot closer to 400,000 to 500,000 than 1 million, which, if you think about it that way, all of a sudden gives us, maybe some hope that we can work through this backlog as we continue to figure this out. I don't think I would argue we're going to get back to 100% capacity of what we were before all this mess started, but I think we can continue to keep creeping closer to it and working this out. So I would agree with you. I think that backlog doesn't look near as big as some reports have suggested. So hopefully that's a good, a decent question to that. Also, I would say you look at that March 1 cattle on feed report and the April 1 report. The decline in numbers of cattle on feed of 5% or so was actually pushing 700,000 head fewer on feed. So there's some big changes there happening as well. So let's see, I'm going to clear that one out because I think I answered it. Well, I didn't even get that done either. There we go. So lower placements, cheap corn, winter feeder cattle and calf prices going to rebound as feedlots need to restock. So, you know, I think certainly cheap corn is what we're headed for. We continue to see reports of planting progress, particularly of corn in the Midwest and the Corn Belt. You know, if USDA's preliminary report on acres planted is correct, and you have any kind of normal yield, we're going to have a record corn crop and much lower prices and much lower feed costs. And so, you know, that typically ought to help feeder cattle prices. You would think with lower placements, we're going to see a need to restock those. I think that those lower placements also correspond to some lower marketings too. So if we thought about the capacity utilization that we're in, maybe we're not so much different there. But you know, I do think as you look at, if I was thinking for the fall, for calf prices in the fall, cheaper feed, how we work through this, the backlog that is there, the need to place again, I think, and quite honestly, cyclically, fewer cows this year than last year means, you know, basically fewer calves this fall than last fall. And so I think that really argues for the opportunity for some higher calf prices this fall than last fall, depending on how we kind of work through what backlog there is. So I think that, you know, certainly that opportunity is there. Now, I would throw one other idea into that, is just how many calves were held over the last couple of months as people, you know, we produced the calves, they didn't go on feed, which means they're still out here somewhere. So we may have some pretty big supplies of heavier feeders available here over the next few months to go on feed. So I think there's a heck of a lot of uncertainty how some of these things really work out. But those underlying kind of fundamental things of cheaper feed and fewer calves for sale, you know, born this spring, probably work in our favor. Let me say one other thing about cheap feed. I guess I could call it that. Maybe I'll call it less expensive rather than cheap. I always get in trouble for using the word cheap, but so much of our cattle feeding has gone to using distillers' grains. And as nobody's been driving around collapsing gasoline prices and oil prices, we've seen ethanol plants close and sharply less distillers' grains available to feed. You know, I tend to think that's less of a problem because we've got the real thing, and that is the corn that the distillers' grains are a byproduct of. So I think that's, you know, the cheaper feed will still be there, but again, you know, we'll probably be feeding a lot less distillers' grains and more corn. So we've got that going on as well. And distillers' grains prices have skyrocketed as production has dropped off. But overall, you know, I tend to agree with that. I think there's some hope out there, particularly in the calf market. So next question, how are preconditioned calf sales going? I must admit, I haven't seen many of those going on. We had there was quite a bit of kind of stopping of those as a lot of the auction markets that would have those special sales, those preconditioned sales, there were a bunch of sales that just didn't happen because of, trying to incorporate all the rules of distancing and all that at the auction market. So I guess I'm going to have to punt on that one and say I haven't seen many sales, and it's probably my fault for not looking around, but certainly early on, it seemed like a lot of special sales like that really weren't happening as much. And so I'm not sure I got a good answer for that one at all, but I'm going to remind myself here I need to go look it up and see. I guess I don't have a good answer for that question at all. Give me a second to write here. Give a gold star for stumping the speaker today. Let's see here. Answered.
It looks like that's all of our questions.
I think we've exhausted the chat. Oh man, we waited too long, and I got another one. Okay, here's this one. I've turned my weaned calves out on grass until the market gets more favorable, and I think a heck of a lot of us did that. Fortunately, we currently have plenty of grass, and I am glad to hear that. I hope these recent rains have helped a lot of us in that category. I think the market for calves will begin improving in late July or August. I've tended to agree with that. Some improvement in calf prices by then. And I think that gives us enough time to hopefully move heavier ones anyway that may have waited for a while here, that might have normally gone in March or April or even early May, that we're hanging on to those. I think it gives us enough time to move those supplies on down the line to get us some better prices later. So I think that's a pretty good comment on the market as well, and I don't believe I disagree with that. And I am glad to hear you got plenty of grass. I hope everybody else is in the same boat there.
Excellent. Well, now I do think we're out of questions.
Yeah. And if we delay too long, somebody will ask another one.
I know.
So I'm going to tell y'all listening, this character right asking me a question is my predecessor, Dr. Ernie Davis, and I'm really glad to get questions from him. I've always enjoyed it. He wants to know if I fixed the doorknob. He asked me this question about a month ago because behind me, that way, the direction I'm pointing, I have a closet there, and he wants to know if I fixed the doorknob, and I'm going to move my camera over there and point it down a little bit, and you will see that I have not fixed the doorknob. It's a casualty of, even working from home, I haven't got that done. I did some of you may have known, I've been getting a lot of media calls to talk about the market, about what's going on. I was actually on the Today Show a couple of weeks ago, and lo and behold, that doorknob was not fixed. And my wife noticed. She said, "You still have not fixed that." So another week's gone by, and it still ain't fixed.
I think we all had big plans at the beginning of this quarantine that didn't.
Boy, I thought, man, I'm going to catch up on stuff. And I've basically just put out fires.
Yeah, been on Zoom the whole time, haven't you?
Yeah, that's right.
Well, thank you so much for getting on Zoom and for being with us today. We sure appreciate it. And you reminded me when you mentioned CFAP. So on Tuesday, June 2nd, we are hosting a webinar with the Farm Production and Conservation Undersecretary Bill Northey on its coronavirus food assistance program. And so he's going to come in and actually he's going to speak to us and then answer any technical questions that you have about actually applying for that assistance. And then we're also creating some stuff that can help walk you through that process. So and
we've got some information, some stuff on our Agriculture and Food Policy Center website, afpc.tamu.edu. It walks you through all the basics of it as well. So if that would be helpful to you.
I've actually looked at your site, so I'll email that out to everybody that's on the call, on the webinar today too. That's a great. Good job with that. So I'll send that, and then y'all be sure and register. I'll also send the registration link for our webinar on Tuesday. So we'd love to have y'all, because I know another question came in about CFAP. So I'll send those resources out to you, and then we'll have that webinar on Tuesday. Kind of exciting there.
Stacey, you want me to answer that question?
If you can, we'd love for you to.
Yeah, we didn't talk about it too much. I'm glad you asked that question. So So the payments are broken out in two parts. It's going to depend, so the question is, what can a typical cow-calf operator expect as a payout? It's really going to depend, did you sell some cattle in kind of the January 15th to April 15th time period? And then the second part of that is what your inventory of cattle was between that April 16th and May 15th period. And so there's two payments. One, if you sold in this time period of depressed prices, that's one. And then the other one is, which really, more affects you if you didn't, there's a payment per head there. And so it's broken out by weight and types of animals. So that's the general part of the way it is. And I think on Tuesday, you'll probably get some more details, but that's a brief answer to what's there.
Yes, thank you. I know a lot of people have had questions about that, and what came out was confusing. So
very confusing. And I would say it's not unusual for something like that to come out, and then everybody asks real good practical questions and forces, in this case, FSA to have to go in and clarify and say, well, this is what we meant, because reality hits. So we've certainly been getting a lot of those same questions, filling out the form. We get questions, well, what about this? What about that? I think one of the kind of the underlying things is I think we've all told people is, just don't overthink it. Just sort of answer the question. How many head did you sell? Show that you sold the head, and don't, sometimes we can ask too many questions if you know what I mean. And so I think it's really it's a pretty easy process. There aren't many questions. I see a comment here that the CFAP process was very easy. The FSA office responded quickly. I'm glad to hear that. A lot of times we get a lot of the questions about problems, and we're working on that. So I'm really glad to hear that. It's not designed to be very hard. Sometimes we can kind of make it harder by asking too many questions. So with that, hopefully that's a good enough of an answer. And I'm glad to hear you're doing the thing Tuesday.
Yeah, I appreciate it, and I think that was a great answer. And Howard Davis is the one that said he had a good process. Maybe we need you to be a testimonial for us on kind of how you did it. So I may reach out to you, Howard. But anyway, thank you so much, and we appreciate you taking the time to be here with us today, Dr. Anderson. Please register for our webinar on Tuesday. We'll have our weekly market update again next Friday, and then we're working on some other educational opportunities coming out to you online as well. And so we also send all of this information out on all of these opportunities to our members. So to be the first to receive industry and market updates, join or renew your membership at tsra.org. And we'd certainly love to have, we send all this information out to members first. And actually the CFAP webinar is not going to go out to anybody but members. So that is going to be a member benefit. So we certainly hope that you can join us Tuesday. And with that, I think we'll call it an afternoon. Dr. Anderson, thank you for being here, and we'll see you next time.
Thanks for having me on. I appreciate it. You guys have a great weekend.
Bye-bye, everyone.